All right, traders, let's go ahead and get started on today's today's daily live webinar. Thank you guys so much for being here. Depending on where you guys are, it's either your Wednesday or your Thursday, but as far as Positive Traders time zone, it is Wednesday, November 29th. Out here in Australia, it is Thursday, November 30th. So wherever you guys are, happy Wednesday or Thursday. Lots of brand new people in the group. We've had a ton of people joining just because people are taking advantage of the pricing before it changes in about, depending on where you are, 2 days or about 24 to 48 hours. So thank you guys for being in here and joining me today. If this is your first live webinar, we're going to be going over all these pairs that you see over to the right, minus the cryptocurrency and oil at the bottom. First thing, though, I do want to go over while I have your guys' attention is, now some of you guys may have seen this, some of you guys may have not seen this. So if you have seen this, just bear with me. We are going to get into some good analysis. I think that we're going to be able to take one or two more trades before the week ends, and there's 2 or 3 pairs that I am pretty keen on trading. So without further ado, let's jump into things. You guys should see a white screen right now, and I just want to break this down specifically for everybody that is new to Positive Traders, to understand how I trade, my style of trading, kind of understand my outlook with the long-term adventure, I guess you could say, with Forex. So this is the premise that I base my strategy off of, is this right here. So I base my strategy off of, if we can take about 10 trades, of course, this is all an average, guys. Okay. So some months we are going to take more than 10 trades. Other months we are going to take less than 10 trades. It just depends on the trading conditions. Those of you guys that may be new to Forex or maybe new to my group or just unexperienced, just to give you guys a heads up, the winter months, so specifically October going into November, December, even a little bit of January, it is the not always the best trading conditions. Liquidity and volatility is generally, liquidity in the markets are generally very low. You don't necessarily have as much volume in liquidity in the markets that we do, that we would in the spring or the summertime. Of course, when I say spring or summer, I guess it depends on where you live, but it's all referring to US time frame. So the winter being October, November, December, January, and summer being, June, July, August, that type of thing. So that kind of gives you guys a little bit of a background. So you should definitely, going into Forex long-term expectations, you should know that we're going to usually get more trades during the summer months and less trades during the winter months. But if we can average 10 trades a month, this is what my goal is. I try to get more than 10 trades, of course. My goal is to try to have between 3 and 5 trades per week, which that averages out between 12 and 20 trades per month, depending on the month. But without getting too sidetracked, let's jump into this. So this is I guess you could say, one of the secrets to being successful is understanding risk reward, understanding risk management. So a lot of people think when you join Forex that you have to have a super high win rate, that you have to learn to be able to win 90% of your trades or 80% or even 70% of your trades to win. Now that is not true. You don't need to win that percentage of the time to be successful. Now, does this group win, or do we have profitable trades 70% of the time? Yes, we do have about a 75% win rate on our trades. So there's about 25% of the time, or a quarter of all of the trades that we take, are going to be losing trades. Losing is imminent in Forex. Once you can get past that in your brain, and let me turn on my video for you guys. You guys should be able to see me. Spotlight. There we go. Let's go ahead and boom. Okay. What's up, guys? All right. So once you can swallow that pill, that you understand that You don't have to win all of the time. You can win 50% of the time, 40% of the time, 60% of the time, and still be profitable, and understand that it always goes back to your risk management and your risk rewards on your trades. Your entire mindset, it's an entire paradigm shift with your mindset. So let's go ahead and look at this example. If we have 10 trades and let's say 5 win, I'm just going to put a W, and 5 lose. If each of those trades we trade with a 1 to 2 risk reward, meaning that means if you risk whatever percentage up front, so we'll say X percentage, all right, for double the, so hold on, let me back up a little bit. I don't think I'm gonna have enough room to write this down. I'll write this on the right side over here. So if we do X percentage, you guys can write this down too. So X percentage for X times 2. Okay. Or better. So if we have 2% risk right here, we are risking 2% of our account to make 2 times 2, which is 4%. Or more, okay? That's always, that 4% is gonna be a minimum. It's not always gonna be 2% for 4%. Sometimes you're gonna have a 1-to-1 risk reward, or you're gonna have a 1 to 1.5 risk reward. It's not always gonna be perfect. We are talking averages, guys. Everything is the law of averages. That is why Forex is long-term. We are talking over the course of months and years, these averages. So a 2% for 4% risk, if we have 5 wins that make us at least our 4%, that means that we are going to make 20% at least. Okay. It's all an average, of course, at least 20%. And if we have 5 trades that we lose no more than 2%, we are going to have a negative 10% loss or less. That's the great part about managing our risk and having a good risk to reward, is your losses are always going to be X amount or less, and your wins are always going to be X amount or more. So there's sometimes opportunities to make more than the 1 to 2 risk reward. So very simple math, guys. If you take positive 20% and negative 10%, you subtract 10 from 20, you still are sitting at a positive 10%. Okay. So this is the goal. This is what we aim for per month. Now, do we always achieve this goal? No. But even if we can get halfway to that goal, 5% per month, you have to understand the power of 5%. A lot of you guys may be coming from groups that I call them quote unquote hype groups. They hype things up. They make things seem really, really good. And then when you join, you don't get anything like you were advertised. It's completely unrealistic returns. So that's the big difference with Positive Traders, is that we focus on realistic long-term results. And my goal is to make 5 to 10% each month. All right. Now, if you put this in the grand scheme of things, that is going to average out to 60 to 120% per year. Now, some of you guys that may have jobs or careers, or you just may be familiar with some more traditional investments such as stocks, options, even real estate, or 401ks, IRAs, CDs, individual retirement accounts as IRA, guys. If you don't know that, CD, cash on deposit, and then your traditional 401k is usually done through the company that you work for, is averaging about 10% per year. Okay, 10% per year. So that is less than 1% per month, because if it was 1% per month, you'd get 12%. Okay, sometimes if you have a really good financial advisor, you're very educated on your investments, then you may get upwards of maybe 15%, sometimes even 20% per year if you really know what you're doing. But the average person is going to be getting 8 to 10% per year, whereas with Positive Traders, we are getting 60 to 120% per year. So this is kind of like the secret, guys, is of course, obviously this 1 to 2, that is the secret right here. But this should help open up your guys' eyes of how powerful being a part of something like this can be. So moving forward, let's just go over to our browser very quickly, and let's throw open the compounding calculator and just show you guys how powerful this 5 to 10% can work for you. So let's just say, everybody has different starting amounts. I talk to people that have $5,000 ready to go. I have talked to people like my business partner, Brendan, who has $50,000 in his account. I have people with over 6 figures in their trade copier accounts. Everybody's balance is going to be different, but let's just use this example with $1,000. And let's also keep in mind what a normal traditional investment like a 401k, like an IRA, like stocks is usually going to take. You usually expect to be invested into that type of thing for about 30 years. Anywhere from 20 to 30 years is the average investment for that type of thing. So if we take $1,000 and we look, and just also to give you guys a little bit of background, not necessarily background, more so expectations of what I do. I do plan on trading and managing accounts and running this trade copier for at least the next 5 to 10 years. My dream is, honestly, I would like to do this for quite a long time. I mean, it's something that I'm allowed to have the time freedom. I'm out here in Australia right now, beautiful, just a little bit out of Brisbane in Queensland. It's Gold Coast, Australia, and it is gorgeous out here, but I'm literally able to just work wherever, guys. I'm doing this webinar 7,000 miles away from my home. So there's no reason why I can't continue doing this for the next 10, 15, 20 years. And I'm only 24 years old. So 20 years, I'll be 44. That'd be cool to make, a couple thousand people millions of dollars, and then, retire knowing I helped a bunch of people, and then just continue trading my accounts. Or I don't know, we'll have to see how life plays out. But if we take something like $1,000 and we grow it, let's just say 5% a month. Let's go on the very conservative side, and let's say 5% a month, which is what we are averaging right now. If you do this for the next 15 years, which I think is 180. Let me just double check, guys. Sorry, my brain is not working. 12 times 15. Yeah, 180. There we go. So 180 is $6,517,000. $517,391.84. So hopefully this shows you guys how, and that is never adding to the balance. That is starting off with $1,000 and never touching it. That most people, once they see the kind of results that you get from positive traders, after a couple months, they'll throw another 500 or they'll throw another 1,000. So just to show you guys how powerful it is, let's say you have $5,000 to start with for the next 15 years. That $5,000 is going to turn into 30 at 5% a month over the next 15 years, automatically compounding your dividends. You get $32,586,959.20. So just to show you guys the power of compounding and why it's important to take this opportunity seriously and not mess around. I think Warren Buffett is the one that said it. He says, if you don't find a way to make money in your sleep, you're going to work until the day you die. And that's really true. I mean, in the society we live in right now, how many people do you know in your own life, maybe as a family, a friend, part of your family, relative, whatever, somebody that that is in their 50s, in their 60s, maybe even in their late 60s or early 70s that still work a job. I can't tell you how many times, guys, I've gone to a Walmart or a convenience store and I see somebody there that is 60 years old, 65 years old. They have gray hair. They shouldn't be working a job. They should have prepared themselves. In my opinion, when you're 60, 70 years old, you should be able to do whatever the heck you want and just live your life. And so this is the power of compounding, guys. You have to take it seriously. So I just wanted to give you guys a little taste of what to expect, since there have been, Positive Traders, we have over almost 300 members in Positive Traders now. We've doubled our size in the past 60 days, largely in part to Brendan Teeger advertising our track record, but also just things grow over time. So it's been a long time coming. I'm very excited for everybody that is new, everybody that has also been in the group for the past year and a half. I really appreciate you guys. You guys can also tell the new people that are in here, that this is true. The power of compounding is it does work. So let's go ahead and jump into things, guys. First and foremost, let's look at the economic calendar very quickly. Looking at the economic calendar over the next 24 hours, not a lot to look at. We just recently this morning had, and when I say this morning, guys, I apologize if it's mixed up. I'm talking this morning, Australian time, but this morning we did have some high impact New Zealand dollar news and some Australian dollar news, which moved the markets a little bit. We'll talk about that when we look at those pairs. Over the next 24 hours, not a ton of things to look at. We do have some euro news this evening, some dollar news this evening, and that's pretty much about it as far as high impact over the next 24 hours. And then at the end of the week, we do have some high impact CAD news, which is, we're going to be careful with CAD. I don't think we're really going to be interested in touching USD CAD anyways, but let's jump into, just be aware of this. If you guys are not familiar with what we're looking at right now, this is a economic calendar. It tells you all of the macroeconomic events that are coming out, or reports, this and that. And if you just go to forexfactory.com, you can actually go ahead and set your time zone. And so all the times over here that you see on the left-hand side, those are all going to be whatever, your time is where you live. So it's very convenient, very handy. You can know exactly your time when high impact news is going to be coming out. So and this is for if you're doing your own trading, or if you're just curious, you just want to learn. And maybe you're following that you're on the trade copier, but you just want to learn. This is sometimes good stuff to know. So, but let's look at the charts for the day. Starting off with the dollar index. If you guys are not familiar with what this is that we're looking at, this is basically, in a nutshell, measures the strength of the dollar. It is an index that is weighted against 6 other currencies, the euro being the highest weight. It's about 56, makes up about 56% of the weight on this index, and the rest are, you've got like the yen, the Australian dollar, I think the Kiwi, the New Zealand dollar. So there's a couple different pairs in there. I don't remember all 6 off the top of my head, but looking at the dollar index, all you need to know is when you're marking up this chart that if this goes down, that is bad for the dollar. If this goes up, this is good for the dollar. And one thing you should definitely write down if you are here for the education, you're wanting to learn for yourself, potentially trade on your own in the future, is you should definitely know that the dollar index has a 90, I'd say I covered this the other day. I don't know the exact percentage, but it's somewhere between 95% and 100%. I would honestly go as bold as say it maybe has a 99 or even 100% negative correlation to Euro USD. So if you look at the chart Euro USD, it is always going to be the opposite of this chart. You notice that how if you literally had like a mirror image, if you flipped the image over, Euro USD looks exactly like the dollar index, but upside down. So kind of cool. If you know where the dollar index is going, you have some analysis on the dollar, then you have a good idea where Euro USD is going. So looking at the dollar index, I am a little bit on the sidelines right now. We talked about the beginning of this week being very bullish on the dollar, expecting the dollar to rise, and this is the week so far. We have seen the dollar rise. It is higher than where we started this week. And we have taken advantage of that. We caught that sell on AUD USD yesterday, but this 93.2 level we've been talking about, we've actually had on our chart for, I don't know exactly how many months, but it has been on our chart for a very, very long time. Let me just scale out to the weekly and just show you guys what I am talking about. Let me move the camera up here too, by the way, so you guys can see. I don't know if it blocks it out for you, but just so you guys can see everything. But this 93.2 level has been a very significant level of multi-year support. We can see starting all the way back in 2015 and moving over, it's acted as major support. Also earlier this year, back in August and July, it acted as major support, broke through it, came back, bounced off of this support and came up. And then just recently over the past week, we did break back below the 93.2. And I was looking at the dollar continuing to strengthen. And the reason why I was looking at the dollar strengthening is more from a fundamental standpoint. The Federal Reserve is expected to raise interest rates next month, which I believe will be either the third time this year, or maybe even the 4th time this year that they've raised interest rates. I think it's the 3rd time that they will have raised interest rates this year. And generally, we'll go into this on another webinar, but just you can write this down if you are writing this in your trading journal, that if if interest rates go up, that is generally good for that economy. And if interest rates go down, that is generally bad for that economy. So if the Federal Reserve, which manages the dollar, if they raise interest rates, that's generally good for the dollar. So we're expecting the markets to price in a rate hike. That's the way we say it. But as of right this second, I am going to be sideways on the dollar just because we're having a little bit of hesitation around the 93.2 level. You can actually see right here on the 4-hour, we are just consolidating sideways. I would like to see a break above this resistance for me to resume my bullish outlook on the dollar index. I would love to see a break and then a bounce and then us move higher back up to 94 and then hopefully eventually, back up into the 95 or into the 95, 96 area. So we'll be watching dollar index very closely, but we are not going to touch it while it is in this area of this consolidation zone. So let's move on to gold. Gold is still, let's get the chart to load very quickly, guys, just a moment. So gold is moving sideways as well. You guys have known that my bias is short on gold. I've been expecting my targets have been, or if you have been watching, and if you're a premium member, you just joined the past couple of days. I think we've had like 20 people join in the past like 2 days or something crazy like that. But even if you haven't been a part of these daily live webinars, I have covered this on the free webinars that I do every Sunday, the weekly outlook, that my target is still around the 1250 area, but I need this channel to break first. So we're still playing in this channel, but I told you guys yesterday, if you were on the premium webinar, that we are probably going to find some resistance around the 1300 level and then drop towards the 1250 level. Now, we obviously didn't take a sell up here because I'm not interested in trading this channel. I'm interested in a break of this channel and then, maybe some sort of bear flag and then drop. But there is the possibility that this channel could continue to get respected and we could pop back up to the 1300 level. So that's why I don't like, I'm not I'm a little apprehensive about taking a trade on this channel right now. So let's move forward on Euro USD. Euro USD. Okay, so it is very similarly to the dollar index, how I am sideways. If we are biased on the dollar index, I am biased sideways on Euro USD. Looking at this pair, it's still moving sideways. So very inversely of the dollar index, we have this consolidation that price is going through. So not really interested in trading Euro USD until it breaks this support. And this is not a guarantee, guys. One thing I want to be very clear with is this is just analysis. Everything we are discussing right now is hypothetical if and when situations. So just because I think that Euro USD could continue dropping doesn't necessarily mean it will. I will be interested in taking a position on this trade if and when. So notice how that's an if and when statement. It's not a we're going to take a sell, but we will take a sell, but it's conditional. It's if and when price breaks this support level. So this is support. If you have your trading journal out, you could actually write this down. That will be interested in taking a trade to the downside on Euro USD if and when our current support around 118.35 or 118.36, this little zone right here, is broken. At that point, we'll look at targeting lower. But if we do move higher and we do see the dollar continue to weaken, then that's going to push this pair higher. So that's why I don't want to trade until we break this level of support. So be watching Euro USD. Let's look at USD Swiss franc very quickly. USD Swiss franc, not very interested in trading it either right now. However, it is following our bias. We were looking at this pair strengthening throughout the week, and you can see the past 4 candles, including today's candle, has been bullish for this pair. We were expecting a bounce off of this. I believe that's the 38.2% retracement level of this swing right here. And yes, it is the 38.2% retracement level. So I'd still like to be bullish on USD Swiss franc. I'd still like to see, of course, as the dollar continues to strengthen, we'll see this pair move up higher. But again, this pair moves very similarly to, if you guys don't know the correlations, one thing you should also write down. So we know that I told you guys the dollar index does the opposite of Euro USD. you should know that Euro USD has a negative correlation to USD Swiss franc. So that means that generally the dollar index and USD Swiss franc, this pair that we're looking at right now, have a positive correlation. So if we see the dollar go up, we'll usually see this pair go up as well. So something to keep in mind. But just like we're on the sidelines with the dollar index, we're on the sidelines with Euro USD, we are going to remain on the sidelines with this pair right now. I think there's a couple, we're going to get into a couple other pairs that look pretty decent for trading. Pound dollar. Let's look at pound dollar very quickly. I told you guys, absolutely not interested in trading this pair. I think this pair and dollar yen haven't been interested in trading whatsoever. So we're just going to skip over this pair right now. Honestly, I have no interest in trading it. I do have an alert set if price ever broke these lows around 130.50. I think that's 130.51 if I am not mistaken. Yeah, I clear that out. 130.51 is our alert right there. So obviously we are very, very far from that, about 420 pips away from this area. So if it's not going with our analysis, it's not going with our bias of what we want, we aren't interested. But there's no surprise that we are seeing this pair move up higher because we're seeing strengthening in the pound. Obviously, if we look at dollar yen, we see dollar yen having a very nice rally right now. And unfortunately, we did miss this move on pound yen. Or I think I said dollar yen for a second. I meant to say pound yen. We did miss this move on pound yen. It was a pretty textbook move. However, my main focus yesterday was AUD USD, which is great because we still made money on AUD USD. So it's not terrible. Yes, we probably could have made a little bit more money on pound yen. But best part about trading the markets, guys, is A, it is long term, and B, this isn't even cliche, but the possibilities are endless. I know that kind of is a cliche saying, but it really is true, guys. The Forex markets are always creating new opportunities every single day, every single week, every single month. So just because we miss one opportunity doesn't mean anything. But if you were doing your own analysis, if you are trading on your own, then awesome. If you did catch this trade, there was some very, very nice moves to the upside. But if you guys have watched the weekly outlook, if you watched or just been following me for a long time now, we talked about this channel right here and expecting the price to go up. So a couple things that we recognized why that might go up is we can see in the past, and you guys know that the whole basis of trading is history repeating itself. We saw a major, major consolidation back in this area before we saw a huge, huge spike up. So that's kind of what I'm expecting to happen in this area. We saw major, major consolidation. Also, nice bounce off of a pretty nice confluence area. We have major resistance, major resistance, major resistance, major support, and then major support right here. That's actually kind of like a little bit of a double bottom in this area. We also have some people call them W's. If you've read Naked Forex, they call them whammies. Everybody calls them different things, but we do have a little bit of I'll just call it a whammy. That's what I learned from reading Naked Forex. That's one of the first times I heard of this structure. But we do have this little W forming here. And so if we can break kind of like this area, I think that we'll get a little bit of a bounce off of this area and then continue moving higher. So my long-term targets on pound yen, I told you guys, is 152. I've had this marked off for quite a while. And then higher. I think we definitely, going into the end of this year, there is definitely room for us to make another push. We can actually look at what this push was right here. That was 12. Oh, sorry guys, I was talking with it muted. Sorry guys, I think the Wi-Fi cut out for a second. We're on a 35th floor, and it was also raining a little bit earlier and yesterday. So I think that affects the internet a little bit. So apologize. Well, without skipping a beat, let's hop right back into it. So pound yen is moving up higher. It is following our analysis of it breaking. I think what I was doing is I was last thing you guys saw, I believe, was measuring up around the same extension, about 1,200 pips higher. So if we measure 1,200 pips from where it started to incline, we can see that that is well into like the high 150s, high 160s. So very, very opportunistic, I think, on this pair. I'm very optimistic on this pair moving higher. I think there's gonna be some opportunities to take some more trades on pound yen. So look for more upside on pound yen, but of course do not enter a trade if you have not placed it. If I haven't called it, or if you aren't already in the trade on your own, don't chase a trade. Dollar yen, absolutely just following our. I'm sorry. What I meant to say is absolutely not interested. It's I'm going to continue with my same bias of not trading this at all. Kind of like pound dollar. We just skipped over pound dollar because it's not looking nice. Price action is hard to read. Same with on dollar yen. Not very interested in trading. I would be interested in trading dollar yen if it broke back above the 61.8% retracement level. But until then, not interested whatsoever. So we're going to skip over this pair. Now let's very quickly break down AUD USD, just so you guys can see this trade that we took yesterday. So from a daily standpoint, before we scale in, we took a sell on AUD USD yesterday just based on the descending channel that we have been in on this pair and how it was respecting our resistance in this area. And so on the 4 hour, we looked for, and we also liked how if you scale in just a little bit, let me do auto, you can see that this previous bear flag, let me remove a couple things. Let me just remove that. You can see that this previous bear flag that we had that broke through our 50% retracement level right here, broke down, came up and retested, and so I'm still expecting decline on this pair. That being said, the trade that we took yesterday, let's drop it down to the 4 hour, and we can look at why we entered this pair. All right, so this trade we entered at the close of this 4 hour candle when this blue 4 hour candle was open, after seeing a very nice bearish engulfing formation right here and a nice rejection up here, expecting decline. So we sold, we did instant market execution. We had our stop loss just above this resistance area. Now there is also this level of resistance over here. So we were actually just a couple pips above that resistance level. And I think that was about a 30 pip stop loss. And our take profit was down in this area. And that was because I believe that is our extension level. That is right above our extension level. So if we look at this extension right here, from that little pullback, we can see boom. So it's a little bit just above our 161.8% retracement level. That is our extension level. That is our target. And just to show you guys how effective, I've showed you guys this a couple times if you've been watching the webinars this week, but just show you how effective the extension levels are. We can look at the last pullback Euro USD made, and boom, price went right down to our 161.8% extension level. So we can see, of course, price moved down into here and then pulled back, and then made its way down to this extension level, pulled back up, and now I think we're going to be moving back towards this extension level. So we'll be watching price very closely. I would like to take another position on AUD USD, or look to take another position on AUD USD just to follow up with the trade yesterday. We did close the trade manually right down. I think actually right here is where we closed the trade at. And the reason we closed the trade, so we actually had a risk-free trade, you guys that followed it. Once we got to around this area on the drop, we did set our stop loss to break even. So we actually moved, we did something like this. We moved our stop loss to break even. So this is a 100% risk-free trade. No matter what happened in the market, we could not lose money on this trade. That's a beautiful, beautiful trade opportunity right there when you can take a risk-free trade. So had this risk-free trade. The reason we closed manually was we closed a couple minutes before this news this morning. I'm sorry, not that news. It was actually, oh, hold on, guys. I'm getting all flip-flopped around. Just a moment. Right before this news right here, right before the dollar news. So last night we closed it a couple minutes before the preliminary GDP quarter over quarter, just because this is a very heavily influenced pair with the dollar, the US dollar. We actually ended up seeing the preliminary GDP come out as forecasted, so that's why we didn't see a lot of movement in the markets, because the markets had already priced in. I think that this drop, if you guys don't know, this going down, this chart going down, that's bad for the Australian dollar, good for the US dollar. And this GDP was forecasted to be good for the dollar because it was higher than last quarter, 3 months ago. Last quarter was 3%. This quarter was forecasted to be 3.3%, so a little bit better than last quarter. But that being said, the markets kind of had already priced in that drop, or I'm sorry, that results before it came out. So we didn't see a whole lot of movement. Now we're seeing a little bit of a pullback on it, but I like to get in another position. I don't know exactly where we would enter at, what the markets are going to look like, but maybe if we get a little bit more consolidation in this area, we'll look to take a break before it moves lower. So we'll see what happens. But interested in still downside on AUD USD. Because my bias is still, I think the dollar will go pop back up above that 93.2 level we talked about, but we're going to be watching to see what happens. We need price action to form for us. Now, New Zealand dollar, US dollar, NZD USD, following our analysis from Sunday's webinar to a T also, but I told you guys not really interested in trading until we get below this current green area where we're just breaking out of, to show you guys on the higher time frames. You can kind of see it a little bit on the daily. You can see some previous double top, and then previous kind of like a triple bottom in this area. And so pretty major support in the current area. It looks pretty nice on the weekly too. It's definitely a weekly level. Let's set on the weekly very quickly. Weekly. And you can see it looks a little bit better on the weekly. You can see that double top, that double bottom on the weekly over here, and you can see it where we broke out of this support area about 2 weeks ago. So my analysis on NZD USD is I still think we're going to see downside. I think that this channel is going to stay intact, but I told you guys yesterday, if you were watching the premium webinar, that I would like to see price break below this level, then either retest it or consolidate around it before moving to our long-term target at 67. So that is that. And also, we talked about extension levels too, just to show you, apply the same extension levels that we applied on AUD USD to this. Look at that extension level, boom, right at our target, which also happens to be this other a retracement level, which is the 61.8% retracement level. So multi-year, this is the low of 2015 to the high of this year. So multi-year highs and lows this is our 61.8% retracement level. If you guys don't know how to draw fib, that is, of course, in the trainings that we go over, but you always pull from the left to the right. So you start over to the left and you go over to the right, whether that's from the bottom to the top or the top to the bottom. You never pull from right to left. You always go from left to right, and that's going to give you your percentages of retracements on the way back. So just very quickly, just to educate you, if this was one full push to the upside, that was the 100%. This is telling you that if price gets down to this level, that is 23. This is 23% of this move retraced. This is 38.2%. I'm sorry, 23.6%, and then 38.2% retraced, and then 50% retraced, and then 61.8% retraced. And then if it comes all the way back down to here, that means 100% of this move right here would be retraced. And then we get into our extensions, right? We get into our extensions, which are past the retracement. So we have our extensions. If it goes past that 100% retracement level, then we move towards our extension levels. Okay. Some people use different extensions, different retracements. There's all sorts of ones out there, but I just use the basic ones, the ones that are very common. I used to use a couple different ones, 70.7, other little ones like that, but I found, just keeping it simpler works better. But to tell you guys why it dropped to, it's actually dropped the past about 6-7 hours. It is because earlier today, we did see this business confidence absolutely horrible for New Zealand dollar. All right, terrible, negative 39.2 versus the previous negative 10.2. So atrocious results for the New Zealand dollar. That's why we saw such a big sell-off on this pair, which was expected, follows our analysis to the downside. So this is a good example of seeing how the technicals are aligning with the fundamentals. Now, looking at USD CAD, Same thing with USD CAD, or well, not same thing, but I'm still biased to the upside on USD CAD. Told you guys the beginning of this week to look for buys on USD CAD, and that's exactly what has been happening. We are seeing an incline on this pair, and I'd like to see this pair move up higher. It'll be interesting to see what happens at this level. This is the 50% retracement level of, I believe, this year. So this is a pretty significant level. So this is the high of 2017 to the low of 2017. So this is our yearly high, yearly low. We are getting back to a major, we can see previously when we reached this 50% retracement level, we're kind of moving around this area, but you kind of see this W. Remember we were talking just on pound yen a second ago. We were talking about the whammy on pound yen. We're also kind of getting a little bit of a whammy on USD CAD as well. So if we do break above it's either going to maybe do something like this, like bounce off and then move up higher, or it may wait to break this resistance, if it breaks this resistance, and then bounce off of here before moving higher. The thing that would change my bias on this pair is this level right here. Let's go ahead and just mark it off right here. This support of the sideways movement we have. If we were ever to break below this level, which is just below the 127 area, then I would be changing my bias back to the downside. But as long as this consolidation to the right, which I might even be as bold as to call this like a bull flag, as long as it stays intact and the support around this area stays intact, we're going to be looking for buys on USD CAD. So that is today's webinar, guys. I think that pretty much covers everything. Sorry for the internet going out. Something about being 35 floors up. You don't always get the best reception. Probably a lot of wiring to get all the way up to this level. So makes sense. But I appreciate you guys bearing with me through this. Jose, awesome. You said good webinar, like always. Thank you, guys. And that's it, guys. As you guys know, I am in Gold Coast, Australia right now. So if you guys are in the area, I will be out here for the next couple months, actually. So if you are in the area and you would like the opportunity to meet up with me in person, maybe do some live trading, that type of thing, feel free to shoot me a message. But other than that, guys, that covers today's webinar. Again, we're mostly on the sidelines for right now. There's a couple of, we went over the pairs that we're looking at. You know, I'd like to see what USD CAD does, maybe get another position on that. We'll see what Euro USD does, maybe get another position on that if the support around the one, if our bear flag at 118.35, 118.36 breaks. But those are the kind of the two pairs that I'm really focused on right now, and that I have been focused on. We'll be watching pound yen as well. But you know, sidelines right now, guys. We closed our USD trade yesterday. We made almost a little bit over 2% on our accounts for the week. So we're actually sitting in very not huge profits, but very tiny profits for the week. Nothing super crazy, but profits are profits, guys. Again, it goes back to that power of compounding that I went over in the very beginning. It's these types of returns are very atypical, and if you can take this seriously, you can just take advantage of the markets, take advantage of what I am giving you guys. I think you all can be very successful long term. So also on a side note, absolutely crazy, Bitcoin almost hit 12K yesterday. Went up to like 11,500, crashed a little bit. So very crazy to be watching Bitcoin, but no recommendations on cryptocurrency at this time, guys. So that's it. Premium members, I'll see you guys on tomorrow, 24 hours from now, 10 p.m. Eastern, for tomorrow's live webinar to wrap up the week. And other than that, if you guys have any questions, you need help setting up the trade copier. Also, there are brand new updated instructions for setting up the trade copier in the back office. It is literally step-by-step, step 1, 2, 3, 4, 5 now. Very easy. If you need help doing any of that, log into the website and there will be instructions. If still too confusing, feel free to reach out to me. But I want to make sure you guys are all taken care of. And that's that, guys. Appreciate you guys' time, and have a wonderful morning, evening, afternoon, wherever you guys are at. Take care, you guys.